Solana has made an impulsive pattern to the downside, indicating that we're gonna get lower lows. And in today's video, what I'm gonna focus on is to show you how to distinguish between an impulsive pattern and a corrective. And being able to distinguish between the two massively increases the odds of your success when it comes to crypto trading. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Solana. Recently, I launched something called the R15 Crypto Gym, where we do daily workouts, detailed workouts, and one of the coins that we're focused on is Solana. So I just wanted to show you yesterday's workout. It was, so here's the gym. This is how the workouts look. It's all done via Telegram, so it's very, very convenient. I just want to forward it. To this part here. I'm going to go into a live chart in just a second. What we said with Solana is if we get a 5-wave move to the downside without the market overlapping, then it's likely that's an impulsive sequence. We're likely going to get some type of correction and then a continuation to the downside. So we're looking for a 5-wave movement and being patient for a correction. So now I'm going to dive into a live chart. So remember, we're going to focus into two differentiating parts: corrective and impulsive. Very, very important to be able to distinguish between the two. And by the way, if you want to have access to our daily workouts with Solana, we also do Bitcoin and BNB. In the description link below, £1, you get a 30-day trial. And you literally do a daily workout. We do a daily workout on these coins, but in detail, the precision. So what we're looking at, I'm just going to zoom out. I'm on a 60-minute chart with Solana. And I'm just going to show you the difference between the red and the yellow. Hopefully you can see these clearly. The red is a corrective structure. Now a correction, it tells us different information to an impulsive trend. So let's just go over some basics, real basics. I say basics, it's advanced until you kind of make it basic, because everything is difficult before it's easy. So what is the difference between the red and the yellow? Well, have a quick look yourself. If I just draw it a bit more precisely, this will be a clue. What do you see as the major difference between the two? Well, on the red is a corrective structure because the waves are overlapping. In other words, this wave here overlaps into the region of this wave over here. That's a massive clue. Whereas in this structure, the market moves down and up. It moves down and up, but this does not overlap into this. These two things give us very different information, very, very different information. So what this tells us here on an impulsive structure where the waves are not overlapping, sometimes it's easier to see if I do a closing line data, if I can just show you it like this. If I show it like this, we can see here that there's not an overlap, right? There's a gap between the two. Whereas when I go to the previous structure and I draw a line like this, we can clearly see that there's an overlap, as in the price moves down and then overlaps beyond this green point into this region over here. Hopefully I'm making myself clear, because this is really, really valuable information. And it's one of the most important things when we're using something called Elliott wave theory. And by the way, in the R15 Crypto Gym, I give you access to a 7-day bootcamp in your 30-day trial. And we cover some of the core fundamentals in Elliott wave and some of these pattern recognition. Because when you can recognize these patterns, what it's telling us is the market psychology, how the market is feeling, but really what's likely to occur next, the end of a trend and the end of a correction. So that's what we're really, really looking for. So if you do join the £1 trial, make sure you check out the bootcamp as well. So with Solana, let's just now focus on what this information tells us is likely to occur next. I'm just going to clean this up and move it back to bar charts. I'm just going to zoom in over here like so. So now we've got a 5-wave sequence, and I was waiting for this because there was a couple of factors that I wanted to see before shorting Solana, literally betting on the price going down and making money as the market goes down. Is I wanted to see this 5-wave structure, 1, 2, 3, 4, 5, because after a 5-wave structure, this might not be complete yet. We might get one more leg to the downside, but let's just say it was complete. What typically follows a 5-wave structure? Really, really important to know. Well, it's actually a correction. And a normal correction, if I just pull up the workout again, it was yesterday's workout, but if I just forward it, this is what I was drawing out yesterday, and we updated it this morning, is what we're waiting for is this type of ABC structure. And we're going to go into a bit more detail because this is really, really common. So when we're looking at this, what we're looking for is some type of pullback like this. And this is really, really common. This will be a textbook pattern from an Elliott wave perspective. 5-wave move to the downside, 1, 2, 3, 4, 5, and then an ABC style correction. So we're going to get a bit more precise on where this is likely to end based on Fibonacci ratios, and then we can look for short trade opportunities because the next move to the downside tends to be bigger than this movement to the downside. Really, really important. So let's just make the assumption that the lower is over here. Again, it hasn't been confirmed yet, but let's just say it is over here. What we're going to do is just two things. Something called Fibonacci retracements and Fibonacci time retracements. There are some more sophisticated ones as we get more data, but I can keep it really, really simple. Most corrections from a time perspective end in something called a 38.2 to 62%. In other words, this green and the red line. The green and the red line, most corrections end in this time frame. So time-wise, saying the 4th of August, 6 a.m. to the 5th of August, 1 a.m. Right? So it's basically giving us a time factor. And then I'm going to do some price. Again, this is the vanilla stuff. We can go into more detail later. But now we've got a price ratio. Price between $42 and $44 on Solana. So what this tells me is, be on high alert if Solana in this date and time zone and price zone reaches this zone, be on high alert and look for potential short trade setups. I'm going to show you one more thing that's really, really, it's advanced, but you'll get it because I know you're a smart cookie, right? So before I do this, I'm just going to set a price alert. I'm going to add an alert. And the great thing with TradingView, you can literally add alerts and just say, look for short trade setups. So if the price goes above this point over here, I'll get an email and then I can review the chart and then I can update it in the Crypto Gym. So what we're going to finish on is this wave C over here, this over here. If it unfolds like this, it is an if because it's probabilities and never certainties, and that's just the name of the game. We never can have any guarantees of what's going to happen, just what's highly probable. Is wave C's tend to break down into a 5-wave sequence. And what that looks like is typically something like this. Something along the lines of this, right? And why I'm bringing this to your attention is when we're shorting a market, we can look for something called a pattern reversal signal. So let's just say the market did unfold like this. It hasn't yet, but let's just say it did. What we will do is, let's just say the price was over here. We want to be ready and anticipate what's likely to occur. So we could actually go short on a swing low. This will be a signal that the market has made a top, that this top's going to hold. But we control our risk. We put a stop loss just above the swing high. And then this over here, the two black lines, represents our risk. And it's normally 2%, 1%, 2%, or 3%. That represents our risk. And we're willing to risk that. Why? Because the potential move to the downside, I'm going to just show you this. I'm forecasting here, but it just gives you an indication, an indicative feel for what's likely to occur. Let's just say it did correct over here. The ratio of the next move to the downside is typically 1.618 of the previous move. Now, what does that mean in English? What does that mean in English? What that means in English is that Solana is likely to have an impulsive move to the downside if it unfolds like this to this region here. This will be typical, $29, and even towards the $19 mark, the $19, $20 mark over here. But this is quite typical. So in other words, if it was a successful trade like so, this red represents your risk, And if it did unfold and we managed to ride the trend, we're talking about a 7x thereabouts in terms of risk reward, what you're risking and potentially what you're making. So the main thing I want you to take away from today, again, I did a bit of forecasting there, so we don't need to do that right now. We can just get rid of these for a second. The main thing I want you to take away from today is Solana has done a 5-wave non-overlapping impulsive move to the downside. That would indicate that we're going to get a continuation to the downside. But after a big sprint like this is referred to like a sprint, it needs a rest, it needs a recovery, and it's normally an ABC correction. Typical maximum is 78.6, which is this red line. And then you tend to get a continuation below this low. And this over here is where we'll look to short the trade. So if you want to join me on my daily Solana workouts where we go into detail, you can literally, on the link below, I'm going to show you what it looks like. Got quite a few goodies in this, quite a few goodies. You also get Bitcoin and BNB as well, but it's a Solana workout, and literally we do a daily workout. It's normally 3 minutes, but I just go into what is valuable today and what should we be paying attention to, but it's to strengthen your crypto trading muscles so you become stronger every single day in terms of your psychology, the patterns, trade management, stop loss management. There's a few different things, entry management, when to stand aside and when for us to be taking action and taking on a trade and having full capital exposure in a sense of 1, 2, or 3%. So if you like today's content, we covered corrections versus impulsive trends, being able to differentiate between the two and why it's really, really valuable. Like, subscribe, hit the bell notification. Let's finish on a quote. I'm going to go with chapter 1 today. Chapter 1, it's one of my favorites, but you can never hear this enough times because repetition is the mother of all skill. So I want to loop this so it drills into our unconscious as we operate on 95% unconsciously. So if we can drill this in, it means we come from it, which is great. So chapter 1 says, it's from Michael Jordan. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. So all we're looking to do is stack the odds in our favor, get in a position to take the best possible shot, so we've got the maximum chances of us having a successful trade, but we just take the shot. So we trade with confidence, without hesitation or reservation, but without being reckless. In other words, we always have a 2-3% risk. I like to do 2%. It's a good amount. If you've got a really, really large account, then maybe drop it down to 1%. And if you've got a really small account and you want to be a bit more aggressive, 3%, but I wouldn't go any more than 3%. So probability, the trend is your friend. Solana looks like the new trend is down because we've got a 5-wave sequence. Be patient for a pullback, a breather, a correction, and then we're going to look for short trade setups, which are going to be covering in the R15 Crypto Gym in our daily workout. So join me tomorrow for tomorrow's workout, and let's see if that correction starts to unfold, and let's see if that conditions are in play before we can consider a short trade. See you tomorrow.